A company is insolvent when it is not solvent. A company can only be solvent if it can pay its bills when they're due and payable. Generally though, in WA, VA, voluntary administration, or liquidation, has almost become a part of the parlance of business. An administrator's first job is to work out whether the business is viable and sustainable. Why do I do this? I'm glad you asked me.
Insolvency is a dirty word. Now, we don't like to think about it. We talk about things that are all bright and bubbly and positive. But how about the negatives? When a business goes into administration, what actually happens? And what can we learn from it? Now, a lot of us run really successful businesses, but it doesn't mean you are not subject to a risk of a black swan event that could take you out. So I'm talking to Paul Blahut. He's been in the industry for decades. He runs his own consulting firm as well. But let's get some insights on what happens and how it happens and how we can prevent it. Come on, have a listen. Paul, how do people get into insolvency? And before that, for people who don't know, what is insolvency?
Insolvency, there's a very clear definition in the Corporations Act. A company is insolvent when it's not solvent.
Oh, no. I didn't know you were a comedian as well.
I'm not. That is written in the legislation.
Are you kidding me?
I'm not kidding you. And a company is...
Hang on a sec.
No,
You're saying in the Corporations Act, that's actually what it says.
A company is insolvent when it is not solvent. A company can only be solvent if it can pay its bills when they're due and payable.
There you go.
There you go. There's the definition and the legal interpretation of insolvency. What is insolvency? Practically and in reality, what does that mean? It means that you don't have enough money in the bank to pay your current due bills. So liquidators and administrators, when they're doing their investigations, have various indicators of insolvency. And that might include things like being late consistently in your payments to suppliers. It might be, not that we use them very much nowadays, but post-dated checks. It might be getting payment arrangements. So any of those signs that show that a business is in cash flow distress, not enough money coming in for things to go out. Yeah.
It's relatively simple, isn't it?
It's not rocket science. No.
Before we go into the administration process, can we talk a bit more about the business and the human aspect of becoming insolvent? Because we see it in our business, in commercial finance, and we get approached by people who, when it's too late, put their hands up in the air and say, the ATO's chasing me, I've got a director penalty notice and they're going to shut me down unless I pay them. Well, how long has that been going on for? Oh, a couple of years. Really?
Yeah.
Now you're going to talk to me?
Yeah, well, people, and specifically blokes, don't like to talk about their failures, do they? So, it is common in this game of insolvency and restructuring to see an exasperated or exaggerated effect on the family life and the personal life as well. Because and why is that so? Well, it's quite simple. I can't talk to my wife about it because she'll think I'm a loser, and I might lose the house. So I definitely don't want to tell her about it. I can't talk to my mates about it because they'll think I'm subpar. They'll think I'm a loser as well. So guys do not like talking about their problems. They might talk to their accountant about it, probably because the accountant's receiving all the documentation from the ATO at the registered office. And, how bad can it be? I've had 3 clients commit suicide over the years, over the past 20 years, guys that just couldn't face it and thought that the best way out was taking their own life. So it can have devastating effects.
Do you find that perspective of I can't be seen as a failure and I can't talk to anyone about this is prevalent across all the generations, or is it more prevalent in the older blokes?
No, I don't deal with very many young directors.
What's young to you?
Anyone under 40. but let's go. Let's say anyone under 30.
Mm.
So there's just not a lot of company directors out there under 30 compared to, well, maybe I don't see them because they don't get into trouble because they're smarter than us old blokes. That's quite possible too. But definitely, in that 60 plus, you don't talk about it. 40 to 60, they might be a little more open about it. But, the guys 60 plus, because don't forget those guys should be at a point in their lives when they're ready to put away the shingle and start enjoying the fruits of their labour, with their partner, wife, family, whatever. And then to find that their business has gone into decline and someone's trying to shut them down when you really should be shutting up shop and going on a leisure cruise, it's really hard. It's really hard.
That's interesting. I do notice that now that we break it down into demographics.
Mm.
The older blokes, because I'll pick it up in financials, and if I ask them about it, I've got to be so careful in my approach because they clam up very quickly and they don't want to talk about it, and they obfuscate.
Yes.
Whereas in I think the 40 to 60, those guys, I can have a discussion, go, okay, tell me what's really going on. And I can be blunt.
Yeah.
For the most part, they're okay with it. And they're looking for a solution openly. So if I can offer something, and go, all right, well, look, we could do this, this and this. It'll be tight for a while, but you'll get through. And your credit will be intact and blah, 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 blah. And they go, all right, let's play. Interestingly, the guys under 30, I think they're at risk of becoming the guys that are over 60.
Right.
Interestingly.
Yeah, well, self-image, is so prevalent now, and so, because of social media and so forth. If you're doing really well, you want to tell the world about it. If you're not, you just want to keep that hidden. And I can see that. I can see that someone who is in the generation where social media is important, they would be just like those old geezers. And I can say that because I'm an old geezer, by the way. so I can say that. Or a grumpy old man, whichever term you want to use.
Both.
So I can see how they would be more predisposed to being like the older guys than that 40 to 60 demographic.
Mm. And I don't think they understand that people like the ATO can shut them down.
Mm.
And the consequences for them at 30, they're going to last years.
Yep.
So you have to take that stuff seriously.
And people don't, especially in Western Australia.
Why is that? And you've seen insolvency and administrations from around the country, so I trust that you can give us a perspective on it.
Mm. Well, there's a couple of things. Firstly, and it's interesting that we spoke about the groups of people that were affected by it more so. Generally, though, in WA, VA, voluntary administration, or liquidation, has almost become a part of the parlance of business, right? It's almost, oh yeah, there's another one, because of the type of business people that we have in WA. And I noticed a huge difference when I was living on the Gold Coast and flying over here and dealing with businesses, especially mining companies, transport companies, construction companies. On the Gold Coast, everyone walks around trying to look busy and pretend that they're busy. But I still don't know what half my mates do over there. In WA, everyone's either digging stuff, making stuff, or shipping stuff, right? They're all doers rather than talkers. And then if they suffer a failure or they're by their business going down, they get back up, they dust themselves off, and they go again, right? They've got big cojones over here compared to the East Coast. That's my view. And so out of that comes this sort of laissez-faire attitude towards VA and liquidation. And to be fair, it's probably only in the last 5 years that has crept in. Like prior to that, if you suggested, if I had a client and we're working out a restructuring strategy or a turnaround strategy, and I suggested, I think we should put you into voluntary administration. Oh, no, don't do that. No, everyone will know, and it'll be on my credit rating, and all my suppliers will cut me off and my clients will throw me out. And now they realise that actually doesn't happen because they might just be a victim of circumstance. It's not always the director's fault that a company goes into administration. There can be external influences like, a client going broke and not paying you, an act of God, a cyclone or something that comes through and affects the job, and you can't complete the job, can't deliver the job. So it's not always the director's fault.
You can only control what you can control.
Correct.
So my view is there are things that are out of your control, and that's part of the risk of business.
Yep.
But that's okay. You accept that risk when you go in and you go, all right, well, all things being equal, you should be okay.
Yeah. The thing to remember that directors should remember is that VA and liquidation, and now there's a couple of other things like small business restructuring and safe harbour, these are government-mandated initiatives. This is not Alan Bond or someone sitting in a corner or Alan Bond's accountant coming up with a way to do this. This is government-mandated legislation, and it's designed for people who are a victim of circumstance sometimes or have a crack, fail, and this is the get-out-of-jail card, right? It's, here you are, you can do this, you can go into administration and compromise your debts, and we'll give you another go. So it won't be a black mark. Now, when you say it's not a black mark, well, of course, credit suppliers will see it as a black mark.
Yeah, in the banking world, in our world, we
go,
that's going to have an impact. Let's avoid it.
But generally, there's ways to deal with that, and the government had given you that as an option if things don't go to plan. So that's, and I think more people are beginning to understand that, and that's why that attitude, and I call it laissez-faire. It's not really laissez-faire, but it's acceptance. It's acceptance of the fact that we have to live with administration and liquidation in our business life, in the business community, in the business sphere. Yeah.
And perhaps we didn't accept it before. Let's talk about the process of administration.
Yep.
So I'll leave the ATO alone. I think I could talk that to death. Or I do want to add, if anybody out there is accumulating or has an ATO debt, come talk to us.
Yep.
Come talk to us. Don't let that be the end of you or cost you. Because remember, from now, of course, your ATO debt, the interest on that is not tax deductible. So all the things that people used to think of using the ATO as a bank now, they're taking that all away and they're chasing you. Don't let that be the end of your business. I'm going to leave that alone. So let's say I'm a contractor, been running successfully for years, got a great relationship with a few of my big clients, and unbeknownst to me, I could not see the warning signs. One of my clients goes bust. They owe me $1 million.
Mm-hmm.
And I can't trade. I put all my working capital into supporting the business while they've been stringing me out. It's now at 120 days and I've got no more cash, and it's not going to come from them because they've just gone bust.
Mm.
I'm in liquidation. I have to liquidate now somehow. I'm in administration. I hit that milestone. What actually happens? How nasty does it get, Paul?
Okay.
And then I'm going to push you for some stories on the effects on family, because it's not just digits on a piece of paper.
Yeah. All right. So let's step back a little bit, because you went straight to liquidation. So normally, well, when you get into this insolvent situation, or you think that you might be going to trade insolvently, your director's duties as prescribed under the Corporations Act are that you take some action to mitigate that situation. You need to do something. And one of those things can be to call in administrators. What is administration? Administration can have two purposes. One is where you've got an issue like you just spoke about. You've run out of funding, and there's a credit squeeze on, there's cash flow distress. So you can use administration to effect a moratorium while you put together a workout plan, a turnaround plan, right? So what happens in that situation is you hand over control of the business to the administrator. Administrators are always accountants. So you'd think that they know what they're doing when it comes to running a business. No accountant jokes here.
What a shame.
So did you hear the one about the constipated accountant?
No.
He couldn't work it out with a pencil or paper. So you appoint this administrator to run your business for a period of time. Now, a couple of things happen when you make the appointment. Firstly, there's a moratorium on any recovery action and legal action against the company. So that's why you use VA when you've got a stat demand that you can't pay, or someone's threatening or has issued a winding up order. You can use administration as a strategy to prevent that, because a moratorium comes in place, and that moratorium says you can't close me down, Mr. Landlord, you can't throw me out, Mr. Equipment Finance, you can't come and repossess your goods, at least not at the start anyway. And then an administrator's first job, if you haven't done this already, is to work out whether the business is viable and sustainable. And so that's the very first thing that I, as a turnaround specialist, do, or an administrator would do, is they would do an analysis of the business and say, is it viable? i.e., does it actually make money? Does it make a profit? Can it cover its costs and its overheads, and leave something at the end to stick in your skyrocket? So that's viability. Next, you have to see if it's sustainable. So it's all well and good being profitable, but if your cash flow is such that you're in the red by a squillion because your debtors, your clients, don't pay you for 30, 60, 90, sometimes 120 days, then, or there are other factors which affect cash flow, that might mean you have a profitable business and it's viable, but it's just not sustainable. All right. So we do that first analysis. And if it is profitable and sustainable, then you say, righto, do I want to keep this business? Do I want to have another crack? And in that very first couple of days when the administrator does that assessment, that's when he decides whether or not to continue trading the business. So if the business is not viable and not sustainable, he'll say, I'm shutting this down, and he'll go into liquidation. But if he says, yeah, actually, this business does make money, it is sustainable, do you want to keep it? I'll work with you, Mr. Director. We'll keep the business open. We'll trade in administration. A couple of things to remember when you trade in administration. It draws a line in the sand on all your previous liabilities. So you then trade the business only on new debt. So if I have a supplier that I owe $1 million to, and there's an administrator appointed, that $1 million sits there for the time being, but he will give the administrator credit to buy goods or services to continue the business on the understanding that the administrator is actually personally liable for any debts incurred during administration.
So they actually take personal liability.
Personal liability.
Did not know that.
Not corporate liability, personal. So a liquidator an administrator, if he's trading the business on, he is responsible for the liabilities of that business.
Wow.
Which is why most suppliers don't have a problem supplying companies that are trading on in administration. Clients often say to me, oh, well, my suppliers will shut me off if I go into VA. Well, hang on. If there's an administrator there that says he's going to pay that bill, he's going to give you a purchase order, and it is mandated by legislation that he's liable for it, what do you got to lose, mate? Most of them will continue to support businesses in administration. So you trade the business on, and whilst the director with his advisors puts together a turnaround plan or a restructure plan, and that plan is presented to creditors in what is known as a deed of company arrangement. And a deed of company arrangement is a magnificent document because you can put whatever you want in it.
Oh, that's handy.
Yep. You can propose whatever you want, and at the end of the day, that proposition will be put to creditors and they will vote on whether they accept that or not. And if the creditors as a majority vote in favour of it, then it becomes the turnaround plan. All right? So
give me an example of what might be in a docker.
So what's in a docker?
And for those listening, docker is deed of company arrangement.
So firstly, there will be usually, hopefully, a cash contribution. So I'm going to provide – so let's just make up some numbers. I go into administration owing $1 million of trade creditors, $1 million of ATO. So I'm in the hole for $2 million. I might say in my docker, I'm going to sell some assets and I'm going to raise $400,000 out of that, and I'm prepared to take a second mortgage out of my house and get $600,000 cash, stick that into the fund, and I'll put up $1 million. And of that $1 million, I propose that creditors get, let's say, 40 cents in the dollar, and the other 10 cents in the dollar for $1 million against $2 million, so that's 50 cents in the dollar. The other 10 cents is used for all the statutory obligations that you need to cover first, all the priority payments you need to cover first in a docker. So that's like employee wages and super.
Yeah.
So and actually, step back on. Let's say I wasn't able to raise 600,000 against my house. I could only raise 3. So sell some assets for 400, 300,000 by refinancing my house, and I'll pay another 300,000 out of profits from the business, out of trading over the next year. So that is a very typical DOCA where there's an upfront contribution, some further financing, and then pay out of trading profits over the next year. So 50 cents in the dollar or 40 cents in the dollar for creditors. All the priority rankings were able to be paid out first, and you got some time to pay off the balance out of trading. That's not a bad result. That's a good
and
result.
You can bat on and rebuild the business.
And some people say, well, hang on, what about the poor supplier who's only getting 40 cents in the dollar? Okay, I get it. But there's another side to it. That supplier may have had a relationship with the company that's gone into administration for a long time. Like, we deal sometimes with companies that are 10 years old, 20 years old, 30 years old, 40 years old. The suppliers have had a good earn out of that client over the years. And there's the possibility that going forward, this company that's in administration today is actually going to work itself out, and they'll continue to be a good client going forward. So whilst it seems unfair that suppliers take a haircut, using the common parlance, there are other sides to it.
And, of course, they have a profit margin built into the invoice they've sent you. So
exactly.
From there, and I've been in that position in another business where we're on the receiving end of a DOCA, and we look at it and go, well, we're forgiving the profit we made. We're going to recover most of the cost of the goods. And in that instance, it wasn't all, but we recovered probably 70%. We go, well, we're actually losing 30% of the cost of the goods.
But you managed to keep a client alive. You're part of the solution that kept all these people employed. And the ATO, when they vote, also take that into account too. One of the considerations is, well, does this workout plan, turnaround plan, look like it actually makes sense? And if so, are we going to end up with a good corporate citizen, a good tax citizen, someone that's paying rent, paying tax, so contributing to the economy of the country and keeping people employed, and there'll be income tax for those people. So sometimes the ATO look at the holistic approach and they go, yeah, you know what?
It's commercial.
Yeah.
It's commercial. How long does this all take? Oh, I've got a question too. The administrator, I wasn't aware that they give personal guarantees, which is pretty heavy.
Very.
So I'd want to be paid pretty well if I'm taking that level of risk.
Yep.
I'd want to make sure that the governance around that business while I'm in charge is super tight.
Yes.
No wonder they want to control everything.
Yep.
Now that makes perfect sense. Where does their payment rank?
They are one of the priority creditors. So when someone pays a DOCA or pays money into a DOCA fund and there's a distribution to creditors, the employees rank first. There's a couple of other statutory things that rank, and then the administrator gets paid before the creditors. Yes, but normally that's taken into consideration when you're in discussion with a director who's putting up a DOCA, or if he's got advisors helping him do a DOCA. There's always got to be that consideration. Now, to your question or point, that given the personal risk that they take, they'd want to be well paid. Absolutely. And the thing you have to remember is that administrators and liquidators, for that matter, don't always get paid. Because if there is if the creditors don't vote for a docker and there's no funds put in to recapitalise the company, then it'll go into liquidation, and the administrator's got the liabilities of the trading liabilities, so he's got that, and then the loss of fees as well. And an administrator has to pay his staff, and depending how big the job is, he could have a few staff working on a job. So there's a lot of stories about the fees that administrators charge, and jokes and comments about they're only toe cutters, they're ambulance chasers. But what people don't see is the times you work flat chat, you've got 10, 15 staff working on a job, it goes on for 3 months and you don't get paid a zack. So yep, the fees might be weighted to take some of that into account.
I think it's got to be. Otherwise, why would you do it? No,
that's right. No,
I wouldn't do it on the liability alone, let alone payment.
And you have to ask yourself, what sort of person wants to be an administrator or liquidator? And so, for complete transparency, I'm not. I'm a turnaround specialist and a restructuring specialist. I am not a registered liquidator or administrator, and I wouldn't want to be. Because you have to deal with people like me. for starters, then a director who's losing it all. Sometimes his family, and you look at sometimes the implications, and you asked about this, referred to it a couple of times. The personal and human side of it. Let me tell you, there is no fun turning up at a factory or a premises and saying to 30 staff, sorry boys, no job. You're all off as of today. It's all over. There is no fun in that. There is no fun in being hammered by creditors and other people during the course of an administration or liquidation. And then to think that you may not get paid, then to be the butt of all those snide comments. I mean, I've been to a lot of creditors meeting where I'm assisting the administrator, and I'm sitting at front table. No one in the gallery is looking up and smiling at you. No one at all. They're just waiting to have a crack.
Yep.
Yeah, have a crack.
What about family? What have you seen? Give us a few extreme examples of what you've experienced.
Well, I mentioned earlier that I've had 3 clients commit suicide. And of course, the effect on families is obviously devastating. I've seen people, and this is the really sad part. These examples I'm talking about now, most could have been avoided if the director, the person involved, had done something about it sooner, if they had taken action earlier. We'll get back to that. So, unfortunately, I have seen people lose their houses. I've seen people who were previously very, very successful build up a portfolio of assets only to lose them all to preying vultures, because when a liquidator has a sale, things rarely get sold for what they could have got sold for if they were sold in normal trading conditions. So I've seen people lose their whole superannuation, exactly what I was talking about, where you got a guy at 60, 65. He should be ready to sit back, relax, and bang, something goes wrong and he loses everything. Marriage split up, divorces. If you're the breadwinner and you're not bringing money in, you reckon there's not going to be some friction at home. You know, when you say to your wife, and especially if you've been successful, right? If you've been successful and your partner, and I'm not going to say wife, I'm going to say your partner, because sometimes the entrepreneur is the female of the species. But if you generally were the breadwinner and all of a sudden there's nothing coming in and you've got to say to your partner, we can't go on that holiday, we can't buy that. No, it's sooner you didn't buy that pair of shoes or whatever. Like, it causes friction, and then you've got to explain why this is so. Why are we in this situation? And sometimes it's very hard to explain.
Or maybe hard to accept.
Oh, yeah.
More so than explain.
Yeah.
I've seen it with clients where that's exactly what happens. And if I break it down and be really blunt about it, in those circumstances where one of the partnership works, builds up a decent business asset pool, which takes a lot of time away from the family. So then they're absent to a degree.
Yes.
They build it up.
Yeah, so they're in the red to start with.
Yeah. So you're not here. I know that you're doing this. I'm getting benefit. Now I'm not getting this from you. You're no longer of any value.
Yeah. And that might be a conscious thought process, or it might be subconscious. You know, I don't think there are many spouses that would put it that bluntly, but you know what? That's probably what's going on in their head in some way.
Yeah, and that's being blunt, and it sounds very nasty, and I don't think people mean to be nasty, but I think the propensity is for that to develop over the time and period that the business is being built. And maybe we don't pay enough attention to that either, and the value of that relationship and time as we're building. Or maybe we don't have enough foresight in the beginning to say, well, if I go on this journey, it might look like this. And these things could happen. Maybe we should actually set our sights a bit lower and value the time together a bit more. I know that's a tangent, but I've seen that.
Very altruistic.
Well, says the guy who built empires the wrong way, according to myself. Just a thought.
Let's go back to something we touched on a couple of times, taking action early, doing something early. Firstly, recognising the signs. Let's be absolutely clear. If there is not enough money in the bank account to pay your bills at the end of the month, there is a problem, right? Now, it could be in one of three areas. Now, we all know the mathematical calculation behind business, don't we? Or do we? So it's revenue, which is sales, less cost of goods sold is gross profit, less overheads is net profit, right? It doesn't change. It doesn't matter what the business is. So if you get to the end of the month and you can't pay some bills, then you potentially are in the position where you might become insolvent. So you should be addressing the three factors of successful business as soon as you get that sort of stress or distress. So do you want to, and I've got a classic example. I won't talk about the industry or who the person is, obviously, but it's a small business, a very small business. And prior to COVID, this person was earning a reasonable living. Nothing huge, maybe making 80 to 100 grand a year prior to COVID. So, but this person didn't have incredibly high aspirations, and they didn't live extravagantly either. But after COVID, revenue has gone down, but the overheads have remained the same, and the cost of goods have remained the same. So mathematics will tell you that you have a problem, that profit's not there. And when you're operating at the lower annual turnover figures, then revenue is a very, very important factor. So how do I sell more? And these need to be turnaround strategies that a business owner implements before there's any talk of going to see a restructuring and turnaround guy. This is just common sense business. There's not enough money at the end of the month. What do I need to do? Go sell more. Or, surprise, surprise, increase my prices. Because if I increase my prices and my cost of goods stays the same, then my gross profit's going to increase, isn't it?
Yep.
Yeah, but tell that to a contractor in WA. Most of them will not raise their prices because they don't want to be outbid by someone else who also is losing money. So a bit of a silly game, that one. Or, you talk about your cost of goods sold to increase the bottom line. Go out and do deals with your suppliers. Join a cooperative or get into a buying group. There's ways you can affect the cost of goods sold. And then overheads. And that's the thing you've got the most control over, but people don't really manage that well. If you've got 4 people working for you and you're not planning to expand, you don't need an office that'll accommodate 8 people.
There's simple things,
common
right?
sense.
Yeah.
Do I really need to be in this flash new building in Elizabeth Quay when I could be in my existing office in Victoria Park? Not that there's anything wrong with Victoria Park. So jumping onto identifying the signs early on, jumping onto it and doing something about it. But if it gets worse, if you start getting demand letters, if you start missing repayments for things that are on finance, it's time to call in a professional, a turnaround specialist who can help you with reorganising your business or helping you understand your business and whether it is a business you should be staying in. Because a lot of people start businesses because they love doing that thing, whatever that thing is, motor mechanic, carpenter, diesel mechanic, whatever. They do it because they're good at that and they like doing it. That doesn't mean that they're going to be good in business.
So, I want to pick up on that and go back a couple of steps. First things first, if you're running short of cash, there's a problem. And if you're not the financial person, I've got a lot of clients, they're great at what they do. They can drive sales. They're not great at reading a balance sheet, profit and loss. No shame in that. Reach out to somebody who can. And go, all right, tell me what's going on here. I would say that first. And I wanted to add, because when you talk about profit, I have lots of clients and they say to me, I don't have any cash left, but there's a profit. Okay. Yeah. The bane of business people is believing that your profit and loss sheet is how you run a business. No, you don't. It's an accounting sheet.
Yes.
Your cash flow is the money in and out. That's the king. Cash is king.
Sustainability as opposed to viability.
Correct. So if I had a client last week, he said, yeah, but last month the P&L says I made $60,000. I go, that's great. He goes, but I've got no money in the bank. Okay, the profit and loss doesn't say you've got money in the bank. The question is, yes, the business made operational profit of $60,000. The question is, where is the money? So let's go and have a look. Here you go. Your customers have it. They haven't paid you. They're using you as a bank. So they've taken your 60 grand and they're holding it. He goes, oh, yeah. Okay, go hit them up. And then there's no magic in it. He went and hit them up, and because he pressed them hard and said, hey, you've got to pay me, 2 weeks later he had his 60 grand. Yeah. And problem solved, by the way. It was as simple as that. So sorry to interrupt your flow, Paul, but
that's being proactive, isn't it? But also getting advice from someone else, because let's face it also, when you're knee deep in a problem, sometimes you can't see the wood for the trees. Now, how simple a solution was that? But the guy's sitting there saying, P&L says I should have made 60 grand, but I've got no money. What am I going to do? How am I going to pay the bill? And they focus on the problem instead of the solution, yeah?
Yeah. Yeah. And again, I don't think there's any shame in that. It's very easy, especially when you're the main person wearing many hats, to get caught up in, but I got to get this job done. I know that's a problem, but I got to get, and this client's got a problem and I've got to solve this and I've got to quote this, otherwise the business won't keep going. And it gets away on you. But at least he had the sense to just ring me and say, hey, what do you reckon? And we solved that problem in like 4 minutes, plus a few phone calls, so probably half an hour.
I hope you were adequately recompensed.
Well, let's just call it goodwill. Our clients are great like that. They know they can just go, hey, I've got a problem. Can I just bounce this off you? And, you don't need to charge for being a sounding board. No. We don't.
No, and that's what happens when you have a relationship with a client. You have a relationship where you're happy to become a part of their business by being, one of the business's trusted advisors. And this is something that accountants should strive to be. Like really the most important person in your business should be your accountant. I'm talking about the external accountant. He should be your sounding board. He should be your trusted advisor. He should be someone that you meet with regularly to discuss strategy. Problem is, many accountants don't do that anymore because they also are busy pumping out tax returns and pumping out, there's no doubt that with the level of bureaucracy now in running a business, accountants are doing much more transactional work rather than the work that they used to do, which was business strategy and helping, consulting to their clients to help them grow their businesses or help them with problems that they have in running those businesses. That's bureaucracy causes so many issues in business, doesn't it? Like you've got to have, it's almost got to the stage, and whether it be HSE or accounting or any other facet of your business, it's almost like you have one person doing the job and then you need a compliance person watching them as well. And don't those overheads build up?
Yeah, that's another that's a bugbear of mine. Let's not go there now.
We'll leave that for episode 2.
Let's do that sometime because I just want to. So we've got into trouble.
Yep.
We've gone into voluntary administration.
Yep.
We've got a turnaround specialist who helps us negotiate a deed of company arrangement.
Yep.
The business now starts to trade. Hopefully we're successful. Family's intact. We come out the other side.
Mm-hmm.
How many dockers are successful post-execution?
50%.
That's not bad.
Yeah.
And is that dependent on the attitude of the director and how steely they are, or is it an outside factor thing?
No, it's a lot of things. It's very much dependent on the director and his attitude. Hopefully they would have learnt some lessons and not fall into the same traps. But it's also about suppliers being prepared to give the company a go or the director a go. It's about client loyalty, staying with the company as well. And I guess it's also about being exposed to other professionals during the course of the tumultuous period of the administration, realising that there are people out there that can help you with problems before they become insurmountable. So it's a combination of those things, I think. Those 4 things.
Getting help. I think being a good communicator as a director and leader.
Communication.
Yeah.
Prevents lots and lots of problems.
It's an amazing thing, isn't it?
It is.
Go talk to your suppliers, get ahead of it. Talk to your bank, get ahead of it.
I mean, how
Just get
different is the response for you, Hannah? Honey, I'm going to be home 2 hours late tonight because I've got a meeting with Paul, and it might involve 1 or 2 drinks as well. But I'll be home 2 hours late, as opposed to just turning up 2 hours late without the phone call. Like, and the old adage, if you're going to be 2 minutes late, you may as well be 2 hours late. But communication.
That's true.
That's a silly little anecdote, but it's true. It's absolutely true. If you ring your bank and say, I've written a check or there's a DD coming out and my account's going to go over, but it's only for this period of time because this is coming in, there's a good chance that the payment won't be dishonoured.
Yeah, and they'll support you.
Yeah.
Same with suppliers. Look, this is going to be a rough period. This is what's happened. Here's my plan. You guys okay? We've been with you for ages. What do you reckon?
No problems.
Yeah.
But don't be any more than...
Yeah, and you've got to keep your commitments.
And keep your commitment.
You've got to always keep your commitments, right? If I say to you, Paul, can you give me an extra 90 days? Here's what's happened that I'll make good. You're going to be quite happy if come 90 days I pay you. You're not going to be very happy with me if I don't.
Yep.
Because then I'm really taking the piss and you know it. Yeah. And there goes trust. Is there anything else you want to add to the do's and don'ts of insolvency?
Yep. Here's a big one. Don't try and hide things. So if you make the decision to appoint an administrator or liquidator, don't think you can hide things because they will always find them. So don't try and be a smarty. Work with the appointee. Be honest. Be transparent, because as in any relationship, if the other side sees that you're being honest and transparent and you're trying to be a part of the solution, they're going to work harder for you. But if you have tried to squirrel things, then they're not going to be happy because they've got an obligation. Their obligation always is for the benefit of the creditors, right? Now, the benefit of creditors and the success of a business and the continuation of a business for a director can all exist. They can coexist happily. They can. But if you try and pull the wool over their eyes, then the administrator's not going to be happy, the creditors are not going to be happy, and it'll all end in sorrow and tears.
And it'd be harder, won't it?
Yeah.
Emotionally harder for everyone.
Yeah, absolutely. I guess that's the best bit of advice I can give to anyone who's contemplating or in a position where they have to make an appointment. Just be prepared to work with the appointee and make sure that you're being honest and transparent.
Paul, you're a restructure specialist. What do you actually do?
I fix shit.
Like what?
Like
what a great answer, by the way.
Well, I do. Some people call me a corporate plumber because I fix shit.
I know what you're getting for Christmas.
So a turnaround and restructuring professional is there to help the director work out what's wrong with his business and what's right with his business, mitigate the stuff that's bad, and have a change in process, attitude, management to effect a better outcome than what you're experiencing at the moment. So when you say, what do I do? The first thing I do is those analyses that I spoke about, making sure, well, that makes you a counsellor in some cases.
Yes, it does.
because if you're looking at a set of books and a scenario and a cash flow projection that shows that this company is never going to make money, but this guy or girl has got their heart set on this business continuing, then you've got to break it to them. Sometimes the best advice I can give is shut it down, liquidate it, and go get a job. That'll be a lot easier, and you'll make a lot more money, and you won't have the stress and hassle and liabilities. So you do have to be you try and be a mentor, but sometimes you do have to be a counsellor. And then you are first and foremost a negotiator and a mediator. So I talk to the company's creditors. And the way you talk to a trade creditor is different to the way you talk to an institution. And, within institutions, it's different talking to a bank than it is to an equipment finance company as it is to a loan shark. I mean, you're always very careful how you talk to a loan shark. So you find that you're in negotiations there. You talk to the ATO. You talk to suppliers, you talk to clients, you talk to staff. So there's a lot of interpersonal stuff going on, and you are very often a mediator and a negotiator and a deal maker. That's that's what a turnaround specialist does. He analyzes, helps the director make a decision, then implements. Implementation, like you can have the best plan in the world. I'm very glad you asked me this question. I get a chance to give something a plug. When I started in turnaround consulting, I set up my own proprietary system, and it's called the 3M system or Triple M system, and Triple M stands for Map, Move, Measure. So MAP is your plan, is your business plan. It's your turnaround plan. It's coming up with a plan that'll get your business back on track. Move, that's the implementation. You can have the best plan in the world, but if you don't move, if you don't implement it, then it's just a bit of paper.
Yep.
So you have to move. And then thirdly, you need to measure. You need to see whether or not you're on track, whether the changes that you've implemented are actually making a difference, and if you are now finally on track to growing your business or turning around your business or whatever. So that's the Triple M system, and it's available only through me.
Where do people find you, Paul?
Not the yellow pages.
You are showing your age now. The younger audience would never know what yellow pages were.
Just Google my name and you'll find me. There's,
Paul Blahut. We'll put it down in the search bar and in the titles.
Or you can Google Sentinel Corporate Advisory. So Sentinel Corporate Advisory. Sentinel as in guardian.
Because that's what you like to be, isn't it?
Yeah, I do. I love. Why do I do this? I'm glad you asked me.
You know what I love? I love a guest who asks his own questions on my behalf and then proceeds to answer them. It makes my life so much easier.
Why do I do this job? I love helping people. I love getting people out of predicaments. It helps me sleep. It gives me a reason for living. Helping people get out of the shit is very, very, very satisfying. Very stressful sometimes, and my wife does wonder why I'm in this business sometimes. But when you get a good result, when you turn around a business, and you see that you've saved X number of jobs and so forth, it's a great feeling. It's a very good feeling.
I can imagine. Thanks for your time, man.
Pleasure.
Appreciate
Anytime.
it. We'll come back and talk about something else that's not insolvency or administration.
Sounds good to me.
Beauty. Thanks.